Hello traders, and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking about refining entries. We're going to be focusing on understanding what refinement really is, how to try and refine potential POIs to possibly have a better risk to reward ratio, and see how we can improve our entries, right? This is a topic that I still see many people struggle with when it comes to refinements, and that I believe it is something that's gonna improve your trading when it comes to actually taking executions and trying to see where the best position is for you to actually try get in, make some money and get out, right? There's some risk associated with refining entries, and we're going to be discussing that in a second as well, right? So with all that being said, if this sounds like something you want to learn today, make sure you stick to the entire video, because once again I'm going to be trying my best to provide you with the information that's going to help you with your refinements. So with all that being said, guys, we're going to be jumping into the whiteboard. This is going to be a slightly shorter video as there's not really that much to cover. Nonetheless, we're still going to be getting into this idea. So with all that being said, let's get started with today's lesson. All right, traders. So here we are on the drawing board. As we said, this is not going to be a very long lesson, to be honest. We're just going to be focusing on the different ideas and things of that nature that you can implement to start trying to refine your entries a little bit better, which is going to lead to better risk to reward ratios at the end of the day, right? So let me do this for you guys. Refining entries, improve your RR, right? This is what we're going to be focusing on. And the very first thing that you need to understand is that we do have multiple types of entries, right? And I've spoke about this quite a lot at this point. Nonetheless, once again, we have, let's do this. So we have risk entries, and we have confirmation entries, right? Now, how you define a confirmation entry, that is something that's completely up to you, right? Most people that I know of probably use something of this, right? Like this, right? So let's say this is your POI, and this would be a confirmation for most people, right? So you have consolidation, you have a spike through the low, a break in market to the left, a retracement into the origin of the break, and this is going to be your confirmation to go long, right? And this is absolutely fine. This is just one way of refining, of confirming your entries with order flow, Wyckoff, whatever you really want to call it, right? So that's one way of doing things in terms of confirmation. And obviously risk entry is where you just place a buy limit or a sell limit, depending on if you're looking to go short or you're looking to go long, and you're placing that at specific levels within your POI, expecting that as price trades into that, it's gonna tap it and it's gonna move the opposite way, right? You're not zooming in looking for some sort of confirmation, right? We understand that, and that's pretty straightforward. Now we're going to be focusing on refining those ideas, right? And we're going to start with refining confirmation entries, even though it's pretty much the very same thing for the both entry types. Let's start talking about refining confirmations. So the first thing you have to understand, as I said in the introduction of the video, there is risk associated with refining your entries. And what I mean with that is that the more you refine, the lower the probability there is for your specific entry to actually be tapped. So let's say this is your 4-hour POI, this green box over here, and the way you're going to be refining your entry, right, and this is the concept that you have to understand, is that you must flick through multiple time frames trying to gather which one of them is presenting the best or the cleanest order flow for you to read, right? And what I mean by that, so let's go through this rather step by step, so I know there's no confusion. So once again, we have in green over here, let's say you're looking at an intraday market, sorry, you're looking at a market from an intraday perspective. Let's say this is your 4-hour block in green. So the way, and now you're looking at this, right? And you're saying to yourself, hey, this is a 60 pip block, right? It may be a 60 pip block. Now you're wondering, is that going to be optimal for me to try and take a buy position with my stop loss below the low? Because in that case, I'm going to have a 60 pip stop loss, which is going to mean that I'm probably going to have to hold this a little bit longer if I want to make consistent profits, meaning I'm going to make decent returns out of that position, or I'm gonna essentially have to sort of accept that my risk to reward is gonna be not optimal, right? And that's why we have refinement. So the way you're gonna improve your risk to reward is by actually zooming. So let's say now in red we have the 30-minute block, which is probably going to be a smaller section within the same 4-hour block. And remember, if this is a bullish POI, you cannot remove the lower boundary of the block over here, okay? Yes, you can adjust the one on top. This green line, you can shrink and make it smaller with the refinements, but you cannot touch the one on below, because this is always going to be part of your block, right? That's an idea that you have to understand extremely well. So we understand that. We've now looked at multiple time frames, and now we can see that if we do this, right, and this is your 30-minute refinement, now you can see that your block has let's do this rather quickly, sorry. So your block went from a 60 pip block to now possibly a 20 pip zone, right? And that's much more effective and easier to work with. Also, that way you're not going to be holding drawdown for that long, because obviously your stop loss is smaller. If you take the entry here and price travels deeper, you're going to be suffering all this drawdown, right? Rather than waiting for a refinement, right? This is your 30 minutes, and this is where it might shift once again and go the opposite way, right? But for that, you have to understand how to select your POIs properly, which is something that I've covered in great detail throughout multiple videos. So there should be no excuse really for you to try and understand that idea, right? So that's your 30-minute, whoops, didn't want to remove that. So that's your 30-minute refinement, but once again, you can go ahead and refine as much as you want, right? As an example, this 30-minute refinement itself, if you go to a 15-minute frame, you may find, right, that you have even a better block, right? Smaller portion of it. Now you're looking at a 10 pip stop loss. Now, if you want to take a risk entry, right, instead of suffering all this drawdown, if price taps the open and travels deeper, you're going to be good, because your stop loss is going to be smaller, your risk to reward is going to be much better, and you're going to have a better return on that trade. However, the risk, once again, is that the price can essentially just tap the 4-hour open and reverse, right? And now you've missed your opportunity. But that's sort of the risk that you take when you decide that you want to refine, because you want to have a better return on the trade. However, that's something that you have to decide for yourself, and that's something that you must try and find balance for yourself. That's an idea that you have to be looking at in terms of your refinement, and something that you have to come to various terms with, and understand that, hey, I'm okay if price taps the open, the 4-hour open, and moves up, right? I'm okay with that. Or I'm not okay with that, and therefore I'm going to try and take it over here, understanding and accepting the fact that price can still come over here and move up, right? So you have to understand that. Whoops, didn't mean to do that. So let's go over here once again, And let's now write the things that I've just explained to you guys, because this is what you have to understand when it comes to refinements, right? As you can see, it's pretty straightforward. It's just understanding the balance that you want to apply to your blocks, how you want to refine them, why you want to refine them, and knowing the risks of actually doing so, right? So let's write certain things down. So refinements, flick through multiple time frames, searching for the better, right? And I'm gonna write this as such because there's really no better, but just for you guys to understand the idea, better OB, right? And what I mean by better, once again, is the one that's presenting the best order flow to you, or the cleanest one. Maybe you see that the beginning of the 4 hour block over here, right, is all in balance for the most part. So you know that has a probability of being filled, and you can say to yourself, hey, you know what? That's great. So I'm gonna assume that that imbalance within the 4 hour block is gonna get filled, and we're gonna be tapping into a 30-minute refinement, 15-minute refinement, 5-minute refinement, however you want to structure that idea, right? But we're just focusing on refinements, and therefore this is why I'm only drawing this POI example. There's no need to draw an entire market because we're focusing on refinement. The ideas should be very straightforward at this point, right? Now, let's once again go through the risk associated with refining, right? The more you refine, the lower the probability your entry will be tapped, right? You have to understand that as well, which is what I've spoken about quite a few times at this point. If you refine it too much, you will find that you're going to miss trades, and it's going to get very frustrating if you, as an example, place your buy limit over here because you want to have the absolute best RR, and this is what happens, right? You barely get a tap and price starts shifting and moving as you've anticipated, but you're not in the position because you've over refined, which is known as over refinement, right? So you have to try and seek for that balance that's going to allow you to enter multiple times, possibly, and it's going to allow you to have a decent risk to reward, right? Now, one more thing over here. So let's get rid of this. Don't want to remove, the block. So I'm going to be very cautious with this. So another thing, once again, a positive of refinement. You will avoid holding drawdown if you refine optimally, right? Because if you're refining, that means that your stop loss is going to be smaller, and therefore you're not going to be holding a drawdown for such a long period of time. As an example, if you were to take the entry over here and price decides that it's looking for the 30-minute refinement here in red, then you're not going to be suffering all this segment of drawdown over here, which I've just drawn for you guys, because your entry is over here and you're not worried about what's happening within this section of the block. Okay, so that's another piece of information that you might want to keep in mind. And the last thing over here is in terms of stop loss placement, right? People get this wrong massively, and it's such a simplistic concept to really understand and comes to various terms with, but still people will try to do the opposite of what they're actually supposed to do, right? So stop loss placement always below POI invalidation or mitigation high and low. And guys, understand mitigation low. That I'm just doing this for a bullish example. You just have to flip the information for a bearish example. Okay, I do not believe I have to go over that over here. I 100% believe that you guys should be able to sort of understand that idea on your own. So stop loss placements, guys. If you're looking for confirmations within your blog, it is pretty straightforward, right? Once you get your confirmation, let's say this is your confirmation and you decide to go long over here, your stop loss has to be here, right? It cannot be here, not here, right? It has to be below the mitigation low, because there's always a probability price can still seek the origin and then move up. And you're gonna be looking like a dumbass because you try to say to yourself that you're the best trader and you're gonna have your stop loss here, and you're gonna get stopped out most often than not, right? If you get stopped out, but your stop loss is below the mitigation low, then that's great because your stop loss is where it needs to be, right? If you get that wrong, then your trade idea is wrong. You have to reevaluate what happened, and that's it, pretty much, right? You were wrong, and that's about it. However, if you get stopped out over here because your stop loss is below the previous low, and that's not enough in that case because price is seeking for more liquidity before pushing up, you're gonna be looking like a dumbass once again, right? So that's one scenario. In the case that you're taking risk entries, I would probably advise to place your stop loss below the POI invalidation point, right? Which is below the lower boundary of your block on a bullish scenario, above the higher boundary of a bearish block for a bearish example. Okay, just on the edges, make sure you give it a couple of pips for breathing. It's not gonna hurt you too much and you're gonna feel a lot more comfortable. So that's everything there really is to understanding refinements. It is very straightforward, as you can see. You just have to flick through multiple time frames, searching for the ones that's presenting the optimal opportunity in your understanding. And once again, you do not have to get it right all the time. You just have to understand how you're going to be comfortable and how you want to be working with that. Understand the risk. The more you refine, the lower the probability your entry will be tapped. And understand another positive, you will avoid holding drawdown if you refine optimally. So with all that being said, guys, we're going to be jumping right into the charts once again. We're going to be just going over one very quick example of refinements, right? We're going to start on a higher time frame, and we're going to be refining the block till I'm happy with it, so you guys can see a practical example on how to actually perform refinements. So with all that being said, guys, I'm gonna pause the recording. We're gonna be jumping into the charts and we're gonna be going through chart refinements. All right, guys. So here we are on the charts. This is gonna be very quick. Not gonna be going through this taking too long. We're gonna be opening something that I don't trade, such as GBP CHF, and we're going to be looking, well, this is a massive downtrend, so that's probably not going to be optimal because we don't have any upcoming blocks. Well, maybe we do if we look at a weekly chart. So let's do this. So let's see over here. So looking to the left, I mean, we can see possibly an order block over here, but we're going to be going through something different. Let's do this one. AUD awesome. I'm trying to look left, but I'm trying to find an example that's going to be easier for you guys. So I'm looking for something that's more recent, right? So let's do this. Okay, so this actually works, right? So let's say as an example, you're looking over here. This is the current price. You're looking to your left and you're trying to identify potential order blocks to go long, right? So as an example, you look at this particular order block, which once again, as you can see, took out this previous low, part of this move up that made a new structural high, as you can see. So this is actually an area that could make sense. However, you have more over here that you have to pay attention to. But for this example, I think this is going to be something that's going to make sense, right? So we're going to drag this across, right? And then we're going to be getting into the refinement. So as we can see, right, price has now entered our POI. This would be the 4-hour open right over here. Great. Now we measure this and you say, well, I don't want to have a 25 pip stop loss, right? As an example, then that's fine. Let's go to a 2-hour chart, and you're going to see how we're going to be slowly but surely finding how we can refine this block, right? And this is going to require you to flick through multiple time frames, just like I'm doing over here. As you can see, I can see one already. So first of all, I'm going to do this properly. This is my 4-hour refinement. Now let's do the 1 hour. You can use this. Right now your block is a little bit smaller than that, right? And this is just applying what I've just explained to you guys. So you're now looking at this particular refinement. Now you have a smaller portion, but as you can see, still rather large. So let's go to a 30-minute. I wouldn't go below the 15 minutes if you really want to get a tap. And in some blocks you may find that the refinement cannot be further refined. But as you can see, I'm not touching the lower boundary because you always want to keep that. That's always going to be part of your block. So now we can refine it to the 30 minutes, right? As you can see, this is now my 30-minute refinement. Lastly, let's go to the 15-minute. Hopefully we can have that data to the left. Okay, so we actually cannot do that because that's too far away. So that's fine, right? As you can see, the concepts still apply, right? You have your 4-hour block over here. And as you can see, we've tapped that, we're mitigating. This is where you would start to pay attention, right? And try and see, hey, we're now in a region that's interesting to me. Let's see what we're doing over here. However, you can also say, I'm not interested in that. I'm going to wait till we get over here because this section over here, it's going to be easier to work with, right? And you just stick with that, and that's how you're going to be refining, and that's going to lead to better risk to reward trades in the long-term game, right? So don't want to make this video too long. This should be good enough for you guys. It's very straightforward concept. Just have to look through multiple time frames and gauge which of the ones is providing you with the cleanest setup opportunity, however you want to define that, and that's going to be the one you're going to stick to, right? So if you enjoyed the lesson, feel free to drop a comment and a like. I will be probably going through that. If you do have suggestions, feel free to drop them below as well, any comments. I do look at them, so you're gonna find that if you suggest me something that I'm interested in doing, I will probably do it. So guys, hope you enjoyed the lesson. Thank you for listening, and I will see you guys very soon. Take care, everybody.